Permian warning. Halliburton said yesterday that activity was slowing in the fastest growing basin in the U.S., while Schlumberger is concerned about productivity gains in the basin flattening out. I wanted to get the real story, and I sat down yesterday with Richard Dealy of Pioneer Natural Resources. It is the pure play in the Permian. It is the company you go to when you want to know what's going on in the region. Here's what he had to say.
Until new pipes come on in the second half of 19, that you'll see some slowdown in activity to a certain extent, just because if people don't have a place to put that oil, they're not going to bring those wells on, and there's no use spending the capital today if they can wait and do that later when they can actually get the revenue from it.
Do you have any sense of if there's money or how aggressive money is being moved out of the Permian into other basins, or is it just paused?
I would say it's more paused. I mean, you hear of companies here and there that are moving capital. You've heard from moving it from the Permian to the Eagle Ford and other places, but I don't hear a lot of that.
Let's talk about infrastructure, because the takeaway capacity issue is well known. What are the other capacity constraints that you see in the Permian?
You know, I think the biggest one is labor. I mean, really, when you think about labor out there, and so the things that we're thinking about is how do you do things more remotely and move things where we do in basin today that we could do out of basin in our Dallas headquarters office, for instance, in the future, or how we use technology to have less, hands on the rigs or less frac hands on the frac fleet, and those are the things I think are important. The takeaway capacity solve itself in the short term.
Does it get worse before it gets better?
It does get worse before it gets better. Okay. I think over the next 12 months it will get worse before it gets better. There's, fortunately on the oil pipelines particularly, there's enough expansions that are coming in the next 6 months that I think it mitigates it to a certain extent. So I think we're probably, the forward curve would tell you we're at the worst place right now. It's at the steepest discount. As it relates to exports, I do think that we're going to continue to move these barrels to the Gulf Coast. It's going to go in the worldwide market. It's not going to go in the U.S. refinery market. But we're finding homes where we've exported 25 million barrels of oil since we started exporting, and we're 17 different customers around the world and seeing a lot of repeat buying. So I think the export market has continued to absorb these barrels. They found homes where they have a nice product mix out of the refinery. So I don't see that as a big issue.